Hello, good morning to all. Welcome to today's Daily Dose of Market Insights. I'm Kelvin Wong here, the Senior Market Analyst of OANDA Asia Pacific. Firstly, happy Friday and good morning. Today will be the 19th of January 2024. So before we start our Daily Dose of Market Insights, let's take a look at the disclaimer slides first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so now let us kickstart first with the performance of the cross-asset classes yesterday, and as well as key events and data that has taken shape. So let us start with the US stock market first. So you look at the US stock market over here. Let me share with you my screen. We start to see almost a sea of green across the board in the S&P 500. All right, so this is the S&P 500 map. So what we could see over here is a very strong outperformance of the mega cap stocks. That means what are the mega cap stocks? That's your Apple, Microsoft, Google, Amazon, Facebook, Nvidia. So what we could see over here is a spew of strong intraday bullish movement in the technology space, especially within the mega cap technology space. Why? Because there are actually two fundamental news driver that is actually driving this news. So we're talking about more of a company, industry specific positive catalyst rather than a macro catalyst. So one of the positive catalysts is Apple managed to get a upgrade. We talk about usually sell side brokerages, they will actually do a upgrade on their stocks that cover. So Apple actually received an upgrade from Bank of America. Okay, so far Apple, this is the one of the positive upgrades so far at the start of this year, because in earlier January there was actually 3 downgrades from the other sell side brokerages in US. So that actually caught on the bullish momentum yesterday. On top of this, we also do have one of these major player in the semiconductor space, which is TSMC in Taiwan. So TSMC actually painted a very optimistic outlook for the global tech recovery in 2024, and also its profit, yes, it fell, but it's less than expected in Q4, and most importantly, it's projecting a growth at the start of this year. So during their earnings, we call it announcement, they actually projected chip maker, we talk about it growth to actually grow to positive territory in 20% year on year in terms of revenue outlook in the entire 2024, driven by AI AI demand of their TSMC semiconductor chips and services. So that actually bring back the AI optimism back into the market as well on an intraday basis, despite the fact that on a macro environment, we do not see so much of a positive driver. Okay, one of the macro environment positive driver is Fed speak. So from Fed speak over here, what we could see over here is there's another official Bostic. So Bostic is a voting member this year in terms of the FOMC committee that set the Fed funds rate. So he did mention over here is that he actually, together with several other global several other Federal Reserve officials, and as well as other major central bank officials like the ECB, he actually urges caution on the current optimistic view that is being priced on the pace and the speed of interest rate cut this year. Okay, so he's still urging on the cautious side, telling market participants that, hey, you guys got to tone down your expectation. That most of them are actually expecting the first Fed fund rate cut to come in March this year. All right, so he's looking for evidence that inflation is still on track to 2%. Should then now the Federal Reserve officials right now is very concerned about geopolitical events before start to normalize their interest rate, current interest rate hike cycle. So geopolitical events. Why is it important? Because of it may cause disruption, supply disruption to commodities, which could in turn push up commodity prices, especially oil price, which eventually in turn will fit into what I call a firmer inflationary expectation going forward. Because the Fed do not want to get trapped again in a potential spike up in inflation while they start to ignite on the interest rate cut as early as March. So with this pushing back of optimism in the what you call it market pricing of the first Fed rate cut to come in March, you start to see the CME Fed Watch 2 that is based on the 30-day Fed funds futures pricing. Market participants now have started to tone down the odds of the first rate cut to come in the 20th of March FOMC to only 53 or 54%. Okay, still recall that almost a week ago it was as high as 70%, and almost about 2 months ago it's about 80%. All right, somewhere around November, December. So what we could see over here is there's this tone down in the expectation. But however, if you look at the overall probability over here by stretching all the way to the entire months of 2024, what we could see market is still expecting or pricing in 6 rate cuts. First one, 2, 3, 4, 5, 6. All right, but the odds itself has starts to decline slightly by a fair bit due to this Federal Reserve officials Fed speak that is less dovish as what is market is expecting. And also do not forget over here is that yesterday, despite the fact that we start to see the push up in US Treasury yield. So yes, US Treasury yield push up, but however, the firm specific. Okay, let me share with the US Treasury yield. Okay, where is the US Treasury yield? Yeah, over here. So after that, we call it less dovish Fed speak as of today. You see the US Federal Treasury yield start to very clearly, the 10-year yield starts to push back up above 4.06%. All right, so above the 200-day moving average. RSI also rather positive, indicating at least some signs of short to medium term bullish momentum coming back into the picture. Hasn't it hit the overbought level? So there is actually an odds or increasing odds to see this further counter trend rebound of the 10-year US Treasury yield to retrace the previous medium term down move from the high of October all the way down to the low of end of December towards the next resistance at 4.33% to 5.4%. So that's actually the 50% and the 61% Fibo retracement. So the key story over here, usually when there's a push up in US Treasury yield, there will be a risk off effect that actually took shape at the start of this week. Okay, but however, yesterday's market performance on the major benchmark US indices chose to ignore this macro negative factor, but focus on firm-based positive factor, which is the positive TSMC outlook that I shared with you earlier, that give another push up of AI optimism, big tech earnings upgrade, or we call it from not earning big techs, we call it this particular, I want to put a better face. Okay, potential upgrade, okay, by sell side brokerages, okay, on Apple, which is primarily the biggest weightage cap in Nasdaq 100, second biggest weightage cap in S&P. So that causes a positive feedback loop throughout the entire market, where all the benchmark US indices close in the green positive territory. The outperformer was for sure will be the Nasdaq 100, up positive 1.47%, and managed to hit a fresh all-time high yesterday as well by breaching above 16,990 level. The S&P, second runner-up, 0.88%. The Dow Jones and the Russell 2000 underperformed, but still with positive gains of around 0.50% each. All right, so that's 0.50%, a bit tongue to stick. Then overall here, like I mentioned, there is this ongoing geopolitical concern that caught also the what I call it, the mind right now on the Fed officials based on Federal Reserve official boasting speech yesterday was this continued fluid situation in the Middle East region, where right now Pakistan get involved as well in this ongoing hostility between Israel and Hamas indirectly, where Pakistan army strike back as Iran. And do not forget, Iran is actually one of the backer of Hamas, which is also indirectly lead to this ongoing, we call it missiles being launched at Israel friendly and the airlines a ship that is using the Red Sea shipping route right now. So it's situation over here. While we are speaking, it doesn't seem to die off right now, and US also choose to retaliate. So with counter strike against Iran back we call it rivals or hot, okay, on this ongoing, what you call it, geopolitical tension in the Middle East. So that actually causes gold price to recover plus 0.8%. So later I'll share the technical chart. Positive, it actually goes back to above 2015 per ounce. That's spot gold XAU slash USD. WTI crude oil also managed to actually close higher, close about 1%, holding above that $71 dollar per barrel. But on the top side, it still remains capped due to the fact of a lackluster demand narrative, especially major central bankers like the US Fed is pushing back on the pace and of the potential interest rate cut in 2024, and with that, China is also less reluctant to introduce forceful and more pronounced fiscal stimulus plan. All right, now short term. Now we are now straight really jump to the short term technical outlook on the various asset classes. So now I'll start with the FX market first. All right. So over here on the FX market, so what we could see over here is that the FX market was rather a mixed bag yesterday. So the dollar index closed almost unchanged yesterday. So this is the 5-day rolling performance as of right now we are speaking. So I could see over here is that we see the dollar actually starts to temper off its strength that was seen on Tuesday, Wednesday and Thursday, Tuesday and Wednesday, the previous two sessions, where dollar start to temper off its strength against the Sing, against the CAD, against the Euro, against the CNH, the Chinese offshore yen, and against the sterling dollar. All right. So the reason why I put in Sing dollar over here because some of us might be interested in Sing dollar, and also Sing dollar has a close correlation with the Chinese yuan due to our increasing trade and relation with China. And on top of it, over here is that dollar still remains rather firm against the Japanese currency, against the Kiwi, and against the Swiss. So Swiss is due to a potential intervention that may start to come in, where there was actually a speech by the central banker in Davos saying that he's a bit concerned about the Swiss strength, Switzerland's currency strength that was depicted in the last 6 months or so. So if you look at the last 6 months, the Swiss currency was actually the top performer, one of the top performer before its strength got tempered off after the speech from its central banker in Davos. Okay, so now with that, right, let me talk about the dollar, the dollar yen. So the dollar yen now right now is actually benefiting from this Japan CPI data that was out earlier on. So if you look at the Japan CPI data over here, out at 7:30 a.m. Singapore time, the core inflation rate, right? Okay, Japan is a bit unique. There's this core and core. So core inflation rate is only excluding fresh fruit, not including energy. We will be focusing on the X food and energy, stripping this, they call it the core rate. So if you strip off the core rate, right, it's actually, yes, it came down at 3.7% year on year against of December, slightly below 3.8% year on year that was recorded in November. So there's a slight downtick, but it's not a sign of a very rapid growth deceleration. So indicating to us that Japan inflation rate is still rather resilient. I think it's closing more than about a year above the 2% target that was set up by BOJ in order to allow them to actually start normalizing their policy. So if you look at the trend over here, is actually slowly inching downwards, but it's not like a very steep growth deceleration in the core rate at this point. But nevertheless, it's still supporting the bullish tone on the dollar yen at this juncture. Okay, so now with that, let us straight away jump into the technical outlook, okay, on the currency pair. So let us start with the European currency first. So over at the European currency, what we could see over here is the euro dollar actually came down. Yesterday we have a bearish bias, hit the support level, which is at 1.0840, before shaping another push up, higher low. So it started to shape a higher low right at the 200-day moving average, which is a key, we call it a technical support level, coinciding graphically with the medium-term ascending channels lower boundary from the low of 4th of October, like I draw over here as well. Okay, we could see over here, and as well as yeah, these two key elements. Okay, so as well as what we could see over here is that the RSI has started to actually slope upwards by shaping a series of higher low after a bullish divergence that was flashed out earlier on Wednesday. So with that, right, we'll be actually less convinced that in terms of a technical perspective, the euro dollar may start to see further potential downside below the 200-day moving average and the 1.0840 level. So we'll be using 1.0840 level as my short-term pivotal support level for today. So we'll be turning to a slight bullish bias for today. For the first resistance to watch will be at 1.0905, which is the 50-day moving average. We need to have an hourly close above 1.0905 to give you a bit of more impulse to retest the next resistance level at 1.0965, which is graphically the minor swing high of 15th of January, and the 20-day moving average now acting as a resistance at this level as well. So, i.e., flipping to a slight bullish bias on the euro dollar for today, given the appearance or the emergence of that positive technical elements that I highlighted earlier, as long as it's managed to hold at the 1.0840 short-term pivotal support. An hourly close below 1.0840 pivotal support on the flip side will invalidate this bullish bias to see the continuation of this corrective decline towards the next support level at 1.080. Sterling dollar. Okay, so on the sterling dollar, we'll be flipping to a neutral bias for today. So yesterday we do have a bearish bias, but price action did actually hit the what I call the 50-day moving average and starts to inch much higher. Okay, at this point in time, so potentially what we could see over here is that the sterling dollar could be actually in a triangle range configuration that is since the high of 20th of December. Okay, if you look at the way I draw the mouse over here, so it seems to be that the triangle range configuration with the lower limit of the triangle support at 126 figure level, around that level over here, same low, so like lower high. Okay, recently. So the next lower high, potentially the upper limit of this triangle range resistance is at 127.60, pardon me, 127.60. Okay, so with that, let me expand my screen so that you guys can see. Yeah. Okay, good. So 127.60. So I'll be using 127.60 as my upper limit for my neutrality range, and the lower limit of my neutrality range will be close to yesterday's swing low at 126.40. So neutral between these two levels, 127.60 and 126.40 for today on the sterling dollar. All right. Now, Asia Pacific currency will be the, let us start with the Aussie dollar. So on the Aussie dollar, I could see on the daily chart, right? Yesterday we were neutral. So on the daily chart, right, it start to shape this very bullish candlestick formation, like a bullish reversal hammer configuration. And right now it's attempting to clear above the 200-day moving average. So all in all, right, what we could see over here is that it actually bounces off from this level here, okay, at 1.0520. Okay, so there's a graphical support being bounced off, bullish reversal candlestick being formed yesterday, and right now there's a potential positive follow through by the attempting to breach above the 200-day moving average again. And on the hourly, on the daily RSI, what we could see over here is that also attempting to actually inch upwards slightly above the oversold region. So net overall, it seems to us that higher time frame technical elements on the daily chart is showing signs of positive bullish momentum coming back into the picture. So with that, I'll be much more what we call it, a bit more confident to flip to a bullish bias from a neutrality stance that we have yesterday on the Aussie dollar, for sure using 0.65 of 20 as my short-term pivotal support level. And on top of that, I want to highlight is that the hourly RSI also staged a bullish momentum breakout from this former descending trend line resistance that I draw after the appearance of this bullish divergence signal that was flashed out yesterday. So with that, given the appearance of this positive technical elements, I'll be much more confident to flip to a bullish bias as long as 0.55 65.20 short-term pivotal support holds on the Aussie dollar. First resistance to watch will be the 66.50 after the breakout of 65.95. So what 66.50 is graphically is the former minor swing low of 5th Jan, 12th Jan now turns into a pullback resistance, and as well as this minor descending trend line all the way from the high of 28th of December. Only an hourly close below 65.20 will invalidate this potential bullish bias recovery scenario on the Aussie dollar to see the continuation of this corrective decline towards the next support level at 64.50. Okay, The only currency that is still showing very clear dollar strength for now, at least a residual push up, will be the dollar yen. So no change on the dollar yen. 14730 short term pivotal support level. Maintain that bullish bias for this potential residual push up to test the upper limit of this minor ascending channel that is in place since 20th of December, now acting as a resistance at 149 figure 14930, which confluence with the one-time Fibo projection, taking from the low of 20th of December to the minor swing high of 5th of December, extend it, project it down for the 9th of Jan, give you one-time Fibo extension level. All right, at this point in time. Okay, so it's 14930, also corresponds to the upper limit of the channel. Only an hourly close below 14730 invalidate this residual push-up view on the dollar yen to see the start of a corrective pullback, or in fact maybe a start of a potential minor medium-term decline in first step to retest the 50-day moving average, now acting as a support level at 14625, which is also confluence with the lower limit of this minor ascending channel. Breakdown below it exposes 14540. All right, so that is for the dollar FX market. So FX market is a bit weak right now, a bit mixed picture right now. Yes, we do see a bit of dollar weakness coming in on the Aussie dollar against the euro, but however, dollar strength is still pretty much prevalent on the dollar yen, at least in the short term, for this potential push up. All right. Okay, so let me touch on the major stock indices right now. So on the major stock indices, right, what we could see over here is a very, okay, let me share with you. Okay, major stock indices. Yeah, so the major stock indices, we see the Japanese Nikkei 225 continue its bullish trend, holding above the 35 36 short-term pivotal support that we have yesterday. So with that, right, price action starts to go up as well, and now almost hit the minor range top that is being formed at the start of this week, which is at 36,215 level before coming down. So with that, right, I'll be using a tighter short-term pivotal support for today rather than 36,360 to have a better risk reward ratio. Okay, using the former minor swing high of yesterday at 35,740. So 35,740. Okay, 35,740 will be the short-term pivotal support that we have for today. So as long as this level holds, potentially we could see a retest of 36,215. A breakout above it sees the next resistance at 36,460 slash 36,660. All right. So however, if we start to see a close hourly close below 35,740, then this bullish tone will be invalidated to see another choppy down move to retest the lower limit of this minor range support level now at which is at support at 35,360. All right, so for the Japan 225, the short-term technical outlook remains bullish as long as this Titan 35,740 short-term pivotal levels holds for today. Okay, short-term pivotal support, yeah, on the Japan 225. Now on the Hang Seng. So Hang Seng over here, no change. It's still holding above the 15,000 short-term pivotal support level. So now it's previously yesterday attempt to actually go back up towards the 16,100 level, but price action now getting lackluster, pushing back down again. So no change as long as 15,000 short-term pivotal support holds, there's still a chance for it to do a kind of a minor corrective rebound, at least in the short term. In first step, first resistance to watch 15,800, then thereafter followed by 16,000 slash 16,100, which is also confluencing the minor descending trendline channel from the high of 28th of December. So net overall, as long as 15,000 short-term pivotal support holds, potentially there could be still a chance of a minor corrective rebound. But however, if we start to see an hourly close below 15,100, 15,000 figure level, then thereafter we will see the start of this impulsive down move to resume to test the next support level at 14,600 on the Hong Kong 33. Then we have the German 30. So German 30 yesterday almost staged that push up and hit our resistance level at 16,640. The hourly RSI is at the overbought level, but there is no signs of a bearish divergence. So price action is going to show higher high. So what we could see over here is that yes, hourly is at overbought. So potentially we may see a bit of pullback. So usually a typical pullback up will come around the 50% to 50% Fibo retracement and 61% Fibo retracement after that very strong clear push up yesterday. So the 61% Fibo retracement corresponds with a graphical support level as well. Former swing low over here at 16,460. So I'll be using 16,460 in any potential pullback. So as long as the pullback didn't break below 16,460, which also potentially very close to the upward sloping 50-day moving average, potentially we could start to see another, after that pullback, potentially we could see another push up to test the next range support level at 16,790 on the German 30 index. All right, only an hourly close below 16,460 will negate this bullish push up again to see a choppy down move to retest the support level at 16,330, which is actually close to yesterday's swing low. So still maintaining a short-term bullish outlook on the German 30 with a tightened short-term pivotal support for today at 16,460. All right, Nasdaq 100 all-time high yesterday, fresh all-time high yesterday by clearing above the 16,990 level. Okay, this level has been cleared. So what we could see over here is that yesterday we do have a neutral view. It cleared also above the upper neutrality limit at 16,910 level. So potentially the RSI is now as overbought level, but no clear of bearish divergence on the overbought level. Potentially we may start to see a pullback first in first step, roughly around the 16,910 level, but I do not want to use the 16,910 level as my short-term pivotal support level, just in case it may get whipsaw around this level. I'll rather use a slightly lower level at 16,770 as my short-term pivotal support. Also confluence with two important elements in short term, 20-day to 20-day moving average acting as a support graphically as well, former minor swing high, then pullback support. And if you look at yesterday's strong push up, this is also confluence with the 61.8 Fibonacci 50%. In fact, it's the 61.8% Fibonacci retracement as well. Okay, 16,770 short-term pivotal support in any chance of any pullback. As long as this support holds, potentially we may see another flash leg of push up to test the next resistance at 17,120. Thereafter, followed by 17,290, which is the one-time Fibo extension of this impulsive move up since the low of 5th of Jan. Project it to 11th of Jan swing high and project it down to the last retracement at 17th of Jan. So give you one time Fibo projection. Okay. Only an hourly close below 16,770 will negate this bullish view for the Nasdaq 100 to see another round of choppy decline to test the next support at 16,500. All right. So flipping to a bullish bias on the US Nasdaq 100 for today. Dow Jones Industrial Average, we're still going to watch this neutrality range that we highlighted yesterday, no change. So remain neutral between 37,550 and 37,170. Only an hourly close above 37,550 may see a potential push up to retest the all-time high range level at 37,800 in the first step. Okay, so that's for the US Wall Street 30. So right now, commodities. So commodities, let's look at WTI crude oil price first. So WTI crude oil, what you could see over here is that yesterday it's going to shape a push up over here. Right now it's attempting to clear above the 50-day moving average. So it's still within a range over here. So I do not want to use too tight support level at the 20-day moving average. Okay, so the 20-day moving average now is acting as a, whoops, pardon me. Okay, it's I think a support at around this 72.60 level, because I don't want to put it so tight because it may is going to swing wildly given the events that is unfolding right now. So I'll be still using 71 figure level in any potential pullback to hold. 71 figure level short-term pivotal support with the top of the range limit will be at 74.95 resistance, followed by 76.05. All right, so net overall still maintain that bullish bias in any pullback, as long as that pullback still holds above 71 figure level for a kind of a push up within a range configuration. Only an hourly close below 71 figure level will see a further slide to retest the 3rd of January minor swing low area at 69.70. Spot gold, for spot gold over here, yesterday we have a kind of neutrality stance or sideways stance, but right now it managed to clear above 2019 level. All right, okay, so with that, which is the 50-day moving average as well. So I don't want to use 2019 or 2015 as my short-term pivotal support, just in case of any whipsaw. I'll be maintaining 2000 short-term pivotal support level, which was very close to the 18th of January Thursday minor bullish reversals low. So as long as 2000 short-term pivotal support holds for any potential pullback, potentially we could start to see another leg of push up, at least to retest in first step the 20-day moving average, now acting as a resistance at 2045 level. Only an hourly close below 2000 level will start to see the continuation of this corrective decline that is still potentially could unfold, may be unfolding, I would say, towards the next support level at 1990, followed by 1975. All right. So net overall, given the appearance of the breakout of 2019 yesterday, we'll be flipping to a short-term bullish bias in first on gold XAU/USD, holding above the 2000 short-term pivotal support level. All right. That's all we have for the short-term technical outlook on the cross asset classes. So now let's go to the economic calendar to see, I'll highlight to you what are the key events to look out for today. So for today in the European session, out at 3 p.m. we have UK retail sales for December. We have another two European officials that are speaking at Davos. 5:30 p.m. ECB Macau, and 6 p.m. will be ECB President Lagarde. Then thereafter, you have the important sentiment data out from US, which is the Michigan flash consumer sentiment data for January. So market is actually expecting a slight uptick to 70 from 69.7 in December. All right, so that's actually the key data to look out for, and that's also sum up today's daily dose of market insight. So with that, I wish you all a great weekend and a great day ahead, and we shall speak again on next Monday. Thank you.